Most business owners believe their company is their retirement plan. Build it, grow it, sell it someday, and ride off into the sunset. But what if that doesn't happen the way you expect? Today, we're talking about how your business alone is not a retirement plan and what smart entrepreneurs are doing differently.
Money Made Modern, hosted by Sheridan Murphy. In Tampa, it's always about getting you ready for retirement. Sheridan is a certified financial planner, and he is the founder of Modern Wealth Methods right here in Tampa. Check out the website, modwealthmethods.com. That's modwealthmethods.com for business owners as well as individuals dedicated to planning for their future. That's what we talk about each and every week. I'm Morgan Patrick. It's a pleasure to jump on with Sheridan. We want to remind you, too, there's going to be an opportunity to get on Sheridan's calendar, no cost, no obligation. Come in and talk about your business situation and, how are you going to handle that transition, the retirement you're headed off into it? Are you going to hand it off to a family member? Are you going to sell it? How does that all work together? You need to make sure you're planning for it. Before we dive in on the dangerous assumption that business owners are making, Sheridan, how's the week?
Great week. We're right here in the throes of March Madness, one of the more fun times of the year. I was down at the games a couple weeks ago and things didn't go their way, but still a thrilling time of the year nonetheless.
No. And you get excited for what is going to be the end of the winter/early spring, and then we're headed off just like gangbusters into summertime. It gets a little warm in Tampa, so you guys have that to look forward to. Stanley Cup playoffs. Tampa's in the hunt again this year, so that's always a lot of fun. Now, business owners, we do this each week. We talk about just the importance of kind of getting ahead of what is going to be your end game, so plan for it. Sheridan, you jumped off on this narrative this week, the dangerous assumption that business owners make. So we're going to start the discussion there.
And the theme of this show today, Morgan, is going to be why your business is not your retirement plan. Probably going to be a striking thing to hear for the entrepreneur, the founder out there, because that just tends to be the default, right? So your business is your biggest asset, but it's likely your biggest risk as well. And we're going to be focusing on really both pieces of that today, but particularly want to bring some importance to the latter of that because it's something that's so overlooked, right? And founders, entrepreneurs, business owners, they can be forgiven for doing so because as we have covered at length on this program, it's your baby, you take it home with you, you put so much blood, sweat, tears into it that it makes sense that you look at it as your largest asset. You've put so much time into it, it makes sense, but it's a risk too. So we'll get into those today. It should be a great conversation, Morgan.
Well, I'll tell you, I think about it, and we're focusing on directing at business owners. But when you think about the individual, I think a nice parallel is if you're headed through your life and you're getting ready for retirement, it's almost like that estate plan for the individual, and make sure that you've got your things in order. So when things are starting to wind down, there's guidance, things are in writing. I mean, estate planning is huge, but it's also part of planning for the individual that a lot of people just kick the can down the road. So now you're a business owner. Let's flip over to that. And you're highly successful. Things are going well, gangbusters, as we like to say. In the back of your mind, you know that it's going to be your big kahuna. That's going to be the big thing at the end. But what do? We keep kicking the cans down the road. We don't start the planning process. We think everything's going to be okay. We just have to get to it at some point. Why not do that now? Have a plan. Work with a professional. So let's get to it. Dangerous assumption business owners are making.
I'm going to begin with a bit of a story. So sat down recently with a business owner, early 50s, great company. Everything seemed to be doing well, strong revenue, strong growth, and doing about $5 million in revenue.
That sounds good.
Definitely. On paper, successful, profitable, growing. But again, looking at both sides of the coin here today, almost all the net worth is tied to the business. Minimal outside investment of said business, no clear exit plan. So essentially, he was counting on the business to fund everything. And as we just alluded to here briefly a couple minutes ago, you can be forgiven for doing so. When you're putting in so much time, effort, you're taking it home with you. You don't punch in and punch out. It is your life and vice versa. It's understandable how you would think that. But To flesh out the problem a little bit here, most founders go down this same path of thought. I'll just sell it someday. It'll be worth more later. That's my retirement. But in reality, many businesses never sell. Many sell for far less than expected. Timing is unpredictable. And that's a phrase that I use almost too much in my own line of work, right? Is we're trying to invest assets. And when it comes to timing of investment, nobody has a crystal ball. And that's why a phrase that has always stuck with me, and this goes outside investing, it's really most parts of life, is it's far less about timing the market. It's more about time in the market, right? And that throws a huge wrench into this whole thing because, as Morgan alluded to, the line of thinking here typically is I'm going to put all this time, effort, money, blood, sweat, tears into this for decades, generally. And at the end of the road here, I'm going to get all of that repaid back with interest. And that's just not always the case. And to put a rubber stamp on that, hope is not a retirement strategy, especially when your entire future depends on it. Right? So again, there's certain problems to the trap that people are falling into as the business owner, the entrepreneur, the founder, and that is you're putting all the eggs in one basket, even if it doesn't seem like it.
So, again, you're successful. You're going 1,000 miles an hour. Have you tried stepping out of a car going 60 miles an hour? It's not going to go well. You have to start planning. How are you going to transition? How are you going to hand off? Are you going to be financially capable of heading off into retirement? And not just capable, but you want to live your life. You want to be comfortable doing it. So questions that you need to be asking yourself as a business owner. These are pretty simple questions, but you really need to answer these.
So to those questions, I want the founders, the entrepreneur, the business owner be sitting there. And again, I always imagine when they're listening to this show, it's Saturday morning. Maybe they're on the treadmill trying to get some cardio in. They're doing some yard work, something else, right? They're toiling as they tend to do. Think about these questions. What is your business actually worth today? What would you net after taxes if you could achieve that price or thereabout in price? Could you retire if it sold tomorrow? I would assume the answer to that is going to be mostly, I don't know, to be honest with you. I hope that does make you uncomfortable because these are groundbreaking questions. These are life or death kind of questions. Maybe not now, but when the time comes, that exit comes, I sure hope you're not somebody who sat there and went, man, I really wish I would have thought about this 5 years ago, 10 years ago, 15 years ago. And to continue on this line of thinking, a lot of businesses don't sell at all, right? Depends on the situation, but oftentimes that is due to unforeseen circumstances. Oftentimes it's things health related, accidental, etc. I don't want it to go down too much of a dark path here, but again, if you don't have the planning in place, these things tend to overlap. Business, personal. So if you don't have a business plan as well as a personal plan, your family, your loved ones, whoever comes after you is going to be sitting there holding the bag. So again, let's say that the business doesn't sell, at least not the way that you had intended in the life cycle of the business or throughout your own career. It's a forced sale because you got injured, you burnt out, health problems, whatever the case might be. If you exit the business, in many cases, the business loses a good chunk of its value because the owner, the founder, the driving force behind it, the lifeblood of the business itself, you are so much of the value at any given time. And it makes sense. Again, you're putting in all the time, effort, you have the expertise, you have the connections. When you exit stage left, if it's not very well crafted and planned for, the value is going to take a hit right away because you cannot be replicated.
I mean,
Right.
think about it, Sheridan. You're a business owner, you've been successful, you're a go-getter. You understand that, it takes it you got to stick your neck out, and you did that, right? You've been successful at it, and now, how are you going to wrap it up? And you need to have these conversations. You need to have these planning strategies well before that day comes. You don't want to be in scramble mode. So I love the questions because the business owner that's out there, They may think their company's worth this when it might be worth less. It might be worth more. They don't know. Asking the question, what is your business actually worth today in today's dollars? It could be an uncomfortable question, but you're a business owner. You did this on your own. You're used to being uncomfortable. So answer some of these uncomfortable questions. What would you need to net after taxes? You need to know that number. And could you absolutely positively retire if you sold it tomorrow? And those three questions, if you can answer them, if you can't answer them, grab an appointment, come in, and let's get working on those answers. So Sheridan, you got the appointments. Walk us through exactly what's going to happen.
We do. And to climax what you said nicely there, Morgan, if you don't have these things planned out, you're essentially retiring on hope. Hope is not a retirement plan, especially when your entire retirement rests on a single asset. The business is a single asset. Don't let hope be the retirement plan. Again, to Morgan's point there, we open up 10 appointments each week. That's no costs, no obligation. We are going to provide to you what we call the business owner's financial blueprint. And it's everything we've talked about in this show and many shows. We will sit down with you. If you have specific questions that we asked that made you uncomfortable, we'll discuss those in particular. We will get into specifics. We'll review everything from more of a bird's eye view as well. We'll see, why are things structured this way? When was the last time you revisited these items? Are we leaving money on the table, specifically in terms of taxes? Those are the kind of things we'll get into. That's why we're here. That's why we have this program. It is things that we have significant experience doing, and in doing so, it'll make you, your business, your family better off. Top 10 each week. Call the number, text the number, get it on our calendar. Let us help you out.
To grab one of our complimentary top 10 appointments, 800-910-6286. You can also text the word modern to 600-700 for that business owner's financial blueprint. Again, if you own a business and you can't answer those questions, you need to grab one of these appointments. 800-910-6286 or text modern to 600-700. When we return, the income illusion. We'll talk about that next. Welcome back in to Money Made Modern. It's all about getting you ready for retirement, powered by Modern Wealth Methods, and we are talking directly to business owners out there, as well as individuals dedicated to planning for their future. And Sheridan, our host, is a certified financial planner. He is also founder and CEO of Modern Wealth Methods. I'm Morgan Patrick. Pleasure to be on. Want to remind you, too, you can check out our social media, Facebook, Instagram, LinkedIn, Modern Wealth Methods. Just give it a search, like it, follow it. Anything that's going on with Mod Wealth Methods, you're going to be able to find it right there. Again, Modern Wealth Methods, give it a search, give it a like, give it a follow. All right, so we started off the program, and again, focusing in on business owners, the dangerous assumption that some of you out there, business owners, are making. And now we move to the income illusion. Bring us in, Sheridan.
One of the biggest surprises for business owners is that high revenue, high income doesn't necessarily transition to high wealth, right? It's all about how can you move wealth and value from the business over to your personal balance sheet. And in doing so, be as efficient. And so we're going to be touching on some examples throughout this segment here. And I'm sure we'll go down a couple of rabbit holes as we tend to do, right? But yes, the income illusion is what we're looking at here. High earners, low wealth, relatively low wealth, I should say. We'll kick it off with an example here. Just as a bit of context, these examples will all run together. They're essentially different versions of the same example. So first one, we'll call this the 300,000 earner. Let's say a business owner is making $300,000 a year. Salary is too high for that revenue point at 200,000, and we'd like to see that reduced maybe closer to 120,000. Again, we're always assuming that we're working properly within market-based competitive salary range. Getting back to the point, want to take that 200,000 salary down closer to 120 if we can. The result of that is just about $12,000 of payroll tax waste and planning inefficiency that we're taking off the table. So we're already into the five figures here for $300,000 worth of revenue for the business owner. And again, the delta on that is going down $80,000 in salary. The net or the difference here is roughly $12,000 of payroll tax waste that we can neutralize. And again, assuming that things are not functioning entirely as they should, that's typically inefficiencies with retirement contributions, hopefully health savings account contributions. Tack on another couple $1,000s there. It's improving the delta, improving the numbers right from there.
So the opportunity really kind of to clean up the situation, having a plan, working with a professional, a certified financial planner, so you can eliminate the waste, right? Take a look, 10,000 feet. And this is something for business owners, and you say this all the time, Sheridan, they're almost too close to it, right? I mean, they're doing this every single day. And if you're working with someone that is, that third party, that voice that can advise on some of these financial moves for the business owner, I mean, that's the peace of mind. That's that confidence we talk about.
Definitely. And to your point, Morgan, yes, they're almost too much in the trenches. They can't see the forest for the trees. There are so many inventions that you can think of where this was invented by essentially an unrelated third party. They walked into a problem, an industry, and a different perspective allowed them to solve that problem simply because they had that different perspective, right? And at the end of the day, we are recommending you allow us to bring in a more expertise of a perspective, a trained hand, right? But without delineating too far, I want to get into example number 2 here. So let's increase that $300,000 up to $500,000. Salary is set at $300,000 this time, and that should be closer to $180,000 to $200,000 with the same caveat I mentioned, the same disclaimer from the last scenario. Savings here, just from the payroll perspective and trying to cut out some of that payroll tax waste is between $15,000 and $20,000. There's going to be some variance depending on the situation, right? But right in a nice 15 to 20,000 zone just from the payroll inefficiency itself. Retirement and tax structure there again, you figure that's going to roughly double those numbers. So we're talking about $30,000 to $40,000 you're leaving on the table. It's not quite 10%, but it's creeping up there, from 7.5% to 10% of overall revenue is being lost in efficiency. And the other thing to consider here is that this doesn't typically happen in a vacuum. Oftentimes, as we talked about on last week's show, this is a trap that the entrepreneur, the founder, falls into. I worked with somebody years ago. They told me this is how to do it. I set it and forget it. Or perhaps less lazy way of saying that is I said it and I didn't have the time, or I didn't take the time to carve out another appointment to see if it's still efficient.
Yeah, I'll get to it later.
And that's just not the optimal way to go through this. So I'm going to give you one more here, and then we'll take some time to delineate. We'll talk about it a bit more. Similar format, different numbers. The $1 million earner per year. Now, salary is at $400,000, and we're suspecting it should be about half of that, $200,000. Savings right there alone from payroll, around $30,000. Again, that is, you are going to be saving on the payroll tax, which is, as a business owner, when you are paying yourself, you're paying yourself on both sides of the fence. Employer, employee, you're paying for Social Security, disability, a few other items, but those are the big tickets right there. Again, $30K savings of payroll. If you have additional advanced planning, retirement, there's other things you can weave in there. As your revenue tends to skyrocket, so too do avenues where you can have additional areas to save, whether it's tax savings, retirement savings, etc. Let's assume that that number goes from $30,000 to $50,000 or even $60,000. Again, easy numbers right there because we're talking about $1 million, 5, 6, 7%. Imagine doing that year over year. And in a situation where you're saving that money for retirement purposes, that money is going to compound. So it goes to show that setting it and forgetting it, not looking at this regularly, you're leaving money on the table frequently, and you're going to be putting yourself in a less advantageous position than you could moving forward.
It's important to be on top of this. And again, we've given you 3 examples of companies that are earning and doing well. They're at different levels, but they're making the same mistake. And that mistake, it really adds up. So having a plan for this and making sure you're dotting the I's and crossing the T's, and you're working with someone that does this on a regular basis. You've got enough on your plate. You're running your company. Make sure you're planning is on pace with your company and you're ready to go. And if there is a succession plan, if you're going to sell it, I mean, that's part of that planning process too, but you're leaving money on the table if you're not planning. Now, opportunity to get on the calendar with Modern Wealth Methods. It's anytime during the show. We have our top 10s, 10 appointments. We fill them each week. They're complimentary. There's no obligation. If you're a business owner out there and you've got questions, and maybe you're one of those that have said it and you've forgotten it, and now it's time to kind of revisit it. Now's the opportunity. No cost, no obligation. Call this number, 800-910-6286. You can also text MODERN to 600-700. Sheridan, just some closing thoughts. Again, as we talk about the income illusion, there are a lot of company owners out there, different stages of earning, but they're all making similar mistakes.
Definitely, Morgan. And to put a bow on this, I've seen business owners leave $50,000 on the table each year for a decade. And that's not because they're intentionally doing something wrong. It's because they weren't shown that there is a better way. So again, these aren't aggressive strategies. This is just structuring things better. Stop leaving money on the table. Stop setting it and forgetting it. And perhaps the more appropriate way to say this would be, make sure you make this a priority. I know there's only so many hours in the day. You're stretched rather thin as it is. You're on call all the time. You take work home with you. I get it. I'm in the same shoes that you are. But it's vastly important. Leaving 5 figures on the table year after year is going to start eating away at your ability to retire the way that you want to, which is what this is all for. So again, listen to the message we have here and let us help you out.
Opportunity to get on the calendar with Sheridan and his team at Modern Wealth Methods, that business owner financial blueprint. And if you have been successful, your company's going well, but you haven't thought about this part of it, which is kind of your end game. How are you strategizing for what is going to be either the succession plan, if you're going to sell the company? How are you going to handle your retirement? A lot of you out there are so busy with your company, this has probably been procrastinated on. It's been put by the wayside. Now you can put it at the forefront, work with a professional, and map this out. So Sheridan, tell us how the appointments are going to go.
We'll sit down and go through everything we've talked about in this program that has caught your attention. You realize I am leaving money on the table. I haven't thought about that in a while. That's why we're opening up 10 appointments each week to the business owner. We are offering what we have termed the business owner's financial blueprint. Take advantage of that opportunity. Get on the calendar with us. Let us work through the issues you're having, whether it's specifics to what we've talked about in this segment, the previous segment, or more overarching fears or concerns. That's what we're here for. That's why we're talking about this for an hour every single Saturday. Get on the calendar. Let us help you out.
Don't miss the layups. I love it because every coach during the tournament is like, hey, we missed the shots we should have made. Uncontested, the layup, the free throws. Same thing goes for your business. You don't want to miss the layups. Call right now and work on your shot. 800-910-6286, 800-910-6286. That business owner financial blueprint put together for you, no cost, no obligation. The number again, 800-910-6286. You can also text MODERN to 600-700. Again, this is your opportunity, and make sure you're on track for your business and your retirement. 800-910-6286 or text MODERN to 600-700. When we return on Money Made Modern, what happens when a business actually sells? That's next. We are back on Money Made Modern. Your host is Sheridan Murphy. You can find him right here at Tampa. Modern Wealth Methods. Again, Modern Wealth Methods. He's the CEO and founder. Check out the website, modwealthmethods.com, and treat that as a resource. Again, modwealthmethods.com. And social media, Facebook, Instagram, LinkedIn. Just search Modern Wealth Methods and give them a like, give them a follow. Anything that's going on, from seminars, just education, it's going to be on social media. Again, Modern Wealth Methods. Search, follow. All right, next up, what happens when a business actually sells? And just to kind of recap where we've been, the dangerous assumption business owners are making, we started off the show talking about that, and then the income illusion for business owners. And now we move to, hey, we're going to actually sell the company, Sheridan.
Yep. So we'll walk through this with as much respect to reality as we can. So I'd like to begin with what we talk about so often. And, it is in a semi amusing, joking fashion, but a lot of the time business owners, founders, entrepreneurs, they will get the best answer that they can, whether that's somebody they work with, somebody they golf with, somebody that they got a beer with, whatever the case might be. And they tell them, I'll try to make it specific to this case. Oh, your business could sell for $10 million. It's valued at $10 million. That just sticks in their head. And I found oftentimes you will get a range where it's, you could probably expect this to be between 7.5 and 10. But in the back of their mind, it's, I've put 60 hours a week, 65 hours a week into this thing for 10 years. Obviously, it's going to be on the high end of that scale, right? So again, it's just funny how the psychological piece of that works. And that's really not me being critical. It's just something I want to point out because it is
Right.
certainly a piece of this.
I was going to say, you're proud of your company and you think it's worth a certain amount, but if you don't actually know. So my question to you is, working with business owners like you do, Sheridan, is it often an inflated number when you guys start talking about value of company without knowing?
And again, so the example we just said, let's say that Jerry, the business owner Jerry, he hears 10 million and again does some due diligence. It's a range, but 10 is kind of the high end. He has that in his mind. 10 million. So we're going to sell the business, and push comes to shove. 8 million is the sale price. Not what he was wanting. Still a decent number. You got what, 80% of what you were looking for there. So let's break it down though, a little bit further. After taxes, if you're getting a $10 million check, or excuse me, an $8 million check in 1 year, that's already $2 million less than you're hoping for. And you're going to be jumping up into marginal tax brackets, right? You're going to get smoked by Uncle Sam. Fees. I'm almost certain there's going to be at least one side with professionals brokering this deal. Billable hours is something that should keep you up at night in a situation like this. Lot of expenses that are going to be coming out of that $8 million pot. Deal structure, which really points to what I said earlier. Ideally, you're not getting one of this in one fell swoop. It'd be great if you can get this over a lifetime annuity. Would be nice to try and get in the lowest tax bracket, deferred as much as possible. But again, it could really turn into a nightmare scenario. If you're cut a big check, you got hands already taking money out of that pot,
Sure.
specific to attorneys and other people that broker these kind of deals. Let's say you're netting somewhere between 5 and 6 mil. Is that enough to fund your lifestyle for the next 30 to 40 years? Is that enough to fund the kind of estate that you want, assuming you have a traditional family, kids, grandkids, people that you care about? I would wager probably not. Again, just to look at this from a bird's eye view, you expected 10, ended up at 8, and after everything else, between 5 and 6. I mean, we're talking 50 to 60% of what you originally wanted. And take a step back. More than likely, if you are selling a business for $8 million, you've had very healthy revenue, very healthy salary, distributions. Ideally, you have quite a bit of wealth that you extracted from the business. Where I want to go with it is another factor that typically comes into these situations is lifestyle creep. Something we've talked about many times, Morgan, is after you're successful for a number of years, it's very natural American issues.
Reward yourself. A lot of people do it.
Exactly. I got the bigger house. I got the nicer car. I got another car. I hang out at the expensive country club. I got the second vacation house. Next thing you know, your obligations are pretty darn high. And if you were hoping for 10, if you started setting expectation for your life, retirement, family planning, estate planning around 10, you walk away with 5 to 6, I don't think 35 to 40 years is going to be funded from that. So again, this should be making people think about these things, make them a little uncomfortable, because it's almost like a fairy tale wedding almost never happens. A fairy tale business sale happens even more rare than that.
Yeah, you used our word today. You used hope. You hope for 10. And if you're planning based on the 10, hope is not a plan. Working with professionals, which we're going to give you an opportunity to get on the calendar with Sheridan and talk about your business and where you are, and are you structured properly moving towards what is going to be what you hope is your big kahuna. Grab one of the appointments at any time by calling 800-910-6286. There's no cost to the appointment. You're not obligated to become a client. And guess what? Sheridan's not obligated to take you as a client. This is an opportunity to see if it's a good fit, and if you want to roll forward, you certainly can. 800-910-6286. We've also made it very easy. You can text MODERN to 600-700. Claim one of our top 10 appointments. Okay, so let's get some key insights just on this particular category. And again, looking at what happens when you are actually going to sell it.
Definitely. And I'd like to make a bit of an overarching statement to sum up what we talked about, and then it'll naturally go into kind of the insights here. And that's selling your business doesn't automatically make you financially independent. It just gives you a lump sum. What matters is what you do next. They're actually looking forward. Start planning years and years before selling, because then you can start at least doing reasonable prepping, right? And again, some of this is going to be difficult to have an exact number on. We don't have crystal balls. We don't know what the future looks like,
Right.
but do some real fundamental planning years in advance.
Yeah, you want an unbiased opinion, a professional opinion on what your company's worth, and that's a great starting point. And then really dig into the planning.
Definitely. Another key insight here would be another point: build wealth outside the business. And the way that I always talk about this is don't look at the business as everything. It is simply the engine. It is the one thing you can extract the wealth from. It should make you personally wealthy. Don't keep all that money in the business, because then you're just putting yourself in dire straits and putting all of your risk into one asset. You want to be as diverse as possible. So with that being the case, again, build wealth outside the business. And you can even get creative. When you have the funds, go out and buy an apartment building in the business's name. That's additional revenue that is not tied to your business, unless you're in real estate. Again, build wealth outside the business. Last key insight here before we digress a little bit and want to just kind of talk about this and chew on it a bit more. Reduce reliance on one outcome, right? Because I'd have to imagine, it's almost a dizzying array of years, moments, quarters, tax returns, hiring, firing, wins and losses that you're going to have over however long your career in this business is. It's decades typically. At the end of the day, one big sale, the big kahuna that you're expecting to springboard off into retirement, that is one outcome, one event that, as much as you do have control over what you put into this business, so many external factors that are going to change the situation. So once again, if that is what you're planning to do, one big event, sell the business, retire from that singular event, probably best to rethink things.
Jump on the opportunity to have a conversation. A lot of you have been very successful with your companies, with your business, and time is ticking away. And the best time to plan is yesterday, right? You really want to get started on this. The opportunity to grab an appointment with Sheridan is coming up, and these are no cost, no obligation appointments. Just sit down and see, first, if the relationship is going to be a good fit. And if you want to roll forward, you certainly can. So Sheridan, let's talk about these appointments. Again, no cost, no obligation.
Definitely, Morgan. We open up 10 per week. No cost, no obligation. If anything that we've talked about in this program has struck a nerve with you, it's made you think twice the way that I should, moving assets and value from the business balance sheet to my own in a structured, tax-efficient, and repeatable manner, if any of those has an answer of no, or maybe I'm not sure, that's why these exist. This is what we do. We help business owners with these problems. We are going to help you with a successful business plan that will also enrich you personally, so you have a successful financial, estate, and overall retirement plan. 10 of those per week. We are offering the Business Owner's Financial Autopsy each week. Get on the calendar, call the number, let us help you out.
All right, here's the opportunity. Call this number right now. No cost, no obligation. 800-910-6286. Meet with Sheridan. Talk about your business and the future of that business. And it's your retirement plan too. This is your company. How are you going to handle that transition? Again, 800-910-6286. You can also text the word modern to 600-700. You've been working hard. You've been putting that blood, sweat, and tears into your company, and you haven't really had the time to really see if you're doing okay, if you're prepared for what is going to be your end game with the company. Now's the opportunity to see if you're on track for that. Sooner the better. Call this number, 800-910-6286. No cost, no obligation. Business owner financial blueprint available to you. Or you can text MODERN to 600-700. We've got more Money Made Modern coming up on the other side. We'll do an autopsy. Don't go anywhere.
Alrighty.
You're locked in to Money Made Modern, powered by Modern Wealth Method. That's where you can find our host. He's the founder and CEO, Sheridan Murphy, certified financial planner, helping business owners as well as individuals that are dedicated to planning, preparing for their future. I'm Morgan Patrick. It's an absolute pleasure to jump on and talk about business owners that are doing well, business owners that are busy, business owners that might not have the planning aspect down when it comes to succession, when it comes to selling the company at some point. It takes a plan. We've talked about it today. We'll continue to talk about it on future shows. Want to remind you too, Modern Wealth Methods, they're all over Facebook, Instagram, and LinkedIn. Just search Modern Wealth Methods, like them, follow them. Again, very educational. Modern Wealth Methods on Facebook, Instagram, and LinkedIn. For today, Sheridan, we've gotten into the dangerous assumption that business owners make, and that's usually what their company's worth, and they've talked about it with friends, but they haven't had a real professional opinion on it. The income illusion when it comes to their company. We gave you 3 examples there. So very important to really have a good feel for your company's size and the money's involved, and make sure you're planning for that. And then what happens when you actually sell the business? So now we get to the autopsy part, to talk about your company. And maybe you're in this category. Maybe you have been successful. The revenues are there, and you feel like your company's worth a price. You really don't know, but you've got questions, and you're thinking, you know what? At some point, I'm going to have to get out of this thing. How am I going to plan for that? The appointments we make available with Modern Wealth Methods during the course of this show, that's the conversation you can have. All right, Sheridan, we're going to do this autopsy. You've got a scenario for us.
I do. Business owner financial autopsy. That's what we've been offering. It's what we offer to business owners. We're going to go through a bit of an example here to close out the show. And it'll likely be an abridged version. Oftentimes these autopsies take 30, 40, 50 an hour, if not longer, depending on the situation. So we'll give it to you short and sweet here. So lay out the scenario a little bit. We have a founder, 45 years old. Income is $750,000. Business profit, $1.2 million. And the net worth is $3 million. And a key point of that is most of their net worth is tied up into that business. So moving on to the risk of this particular scenario, everything is tied to one business, one industry, one income stream. So again, one thing breaks, everything falls apart.
Not a lot of diversity.
No diversification. You're setting yourself up for failure, right? You are involved in real estate around 2008. We had the Great Recession happen. And if you were a realtor, lender, construction, anything really surrounding residential housing, everything came to a screeching halt. And that lasted for years. So imagine you'd been putting decades of blood, sweat, tears into one of those businesses, into that industry for decades. And you had planned to retire right there around that 4 year time window. That 10 million valuation you had in the back of your head, it doesn't look like the scenario we gave a couple segments ago. You're not going to get that 8. You might get 5. Who knows? But again, there are so many external factors that when all of your eggs are in one basket, you have far less control than you thought. And any one of those external factors, it could be maybe your health starts to go south, unfortunately. Maybe there is another life event that throws itself into the mix. Maybe our economy in general just goes down the tubes. We operate in a capitalistic society. We go through booms and busts. It's going to happen. Some of that you simply can't time. We don't have a crystal ball. Try to cut out as much of these external factors as you can. Instead of putting everything into the business, into one basket, start to extract wealth from the business, from their balance sheet to your balance sheet, and make sure that your ship is unsinkable as possible. If you're putting money into a retirement account in your IRA, you're not going to put every cent into one stock for the same reason. Now, it's certainly a larger example of that same risk, but it's the same risk. Putting all the eggs in one basket, not diversifying, you're just setting yourself up. One issue could arise and everything's derailed.
Your retirement, your lifestyle. Again, to grab one of our appointments, have these conversations in person with Sheridan right here in Tampa, call this number, 800-910-6286. You can also text MODERN to 600-700, that business owner financial autopsy. Take a look at what's really going on with your company. And we've said this before, and I'll restate it. Sheridan said it very well. You're successful. The numbers show that you're doing well, but you really need to dig in. And you're going 1,000 miles an hour. You own the company. Things are going well, but how are you going to pump the brakes and make sure that you're planning for what is going to be your future, your retirement? I mean, these are important questions to have answers to, and the opportunity to do that at no cost, no obligation with Modern Wealth Methods. It's ongoing during the course of this show. 800-910-6286. You can also text MODERN to 600-700. Just some closing thoughts. Let's wrap it up.
I'd like to give just a couple of bullets here in terms of a solution framework. Optimize the tax structure. Make sure that your distribution schedule makes sense. Don't set it and forget it. You're just leaving money on the table year over year, and there's a compounding effect to that. Build investments outside the business. We've talked about that. Again, you want to be taking money and value off the business balance sheet onto your own, doing so in a repeatable, tax-efficient manner. Plan for an exit early. Plan for exits that are outside of that single large exit, right? Maybe 5-10 years before you would expect to. If you can cash in on a great deal, always be ready to do that. Create optionality. The goal isn't just to build a successful business. The goal is to make the business optional at some point. Again, optionality. Let's say you're sitting there and you're one of our examples here. You're in your late 40s, maybe early 50s. You expect you still got 5, 7, 10 years even. But it's optional, right? It's optional where I've done so well. I have extracted value and put it on my own balance sheet. I have diversified my asset base. I have a strong foundation. And at that point, I'm essentially just waiting for the best deal over the next handful of years. And if I got to wait another 7 to 10, I'm essentially expecting to do that. But have the optionality, build that foundation, be flexible. And in doing so, having the optionality is going to be the best tool in your tool belt, right?
Think about that. Optimize the tax structure, build investments outside of your business, and plan for exit early. So you might not have to be there the extra 10 years, but you've got to plan for it, and then create optionality. The opportunity to get on the calendar with Sheridan and his team at Modern Wealth Methods, it's right now. It's our top 10. There's no cost. There's no obligation.
Exactly what you said, Morgan. For the next 10 business owners who reach out, we're offering a complimentary business owner financial blueprint. This is specifically for entrepreneurs who want to turn their business income into long-term wealth. Most business owners have never had this type of analysis done. We will review your tax structure, diversification strategy, and long-term financial plan. We uncover areas that can save tens of thousands of dollars per year. There's no cost, no obligation, just an opportunity to see if your financial structure is working as efficiently as it can and should. Call the number, text the number, request your blueprint. Let us get in the weeds with you. Let us help you out.
Business owners, we know we've struck a nerve probably on several different issues with you. Now you can take action on your own behalf. The Business Owner Financial Blueprint, no cost, no obligation. We call it our top 10. That's 10 appointments. So 10 blueprints for our business owners out there. No cost, no obligation. Call this number, 800-910-6286. You can also text MODERN to 600-700. You're out there. You've been procrastinating. You're a successful business owner, but you're going to do it later. You're going to do it next month, next year, maybe 5 years from now. Start now. No cost, no obligation. The number to call, 800-910-6286. That's 800-910-6286, or you text MODERN to 600-700 and claim one of those appointments and get that business owner financial blueprint put together for you. No cost, no obligation. Another edition of Money Made Modern with Sheridan Murphy, powered by Modern Wealth Methods, is in the books. I'm Morgan Patrick. See you on the radio next week.
Good stuff.